Time now for the Executive Edge this morning. We've got some stock movers to tell you about in the dating and drug world. Are we combining those things, dating and drugs, together? I don't know. Okay, we're going to start with dieting, though. Is that related to dating? I mean, this could get all complicated very quickly.
It's intertwined in some way.
I know. Okay, here we go. Shares of Weight Watchers. We're going to get in trouble here. Shares of Weight Watchers, they are surging. Take a look at this. Shares are up 22.5% this morning. The company's earnings beating Wall Street's expectations. This now on the second quarter, and it raised its full-year earnings outlook. But the stock's still down more than 60% since last September. We should show you probably a longer chart there. That's when the company announced it was rebranding to WW and shifting focus from dieting to promoting wellness and healthy lifestyles. Meanwhile, so we go from dieting
to dating.
To dating. Some people diet to date.
Right.
This is why I'm connecting the dots for people. Shares of Match Group, they are soaring this morning. The online dating app company reporting better than expected second quarter results. The company also forecasting third quarter sales above estimates as its popular Tinder dating app attracting more users. There were 5.2 million average Tinder subscribers in the quarter. That's 1.5 million more than last year. I'm surprised there isn't a partnership between Match and Weight Watchers.
That's terrible.
It is.
People should love you for who you are.
I agree with you. I'm just saying that I'm trying to connect these stories that seem so disparate. Okay. They are disparate stories.
Connect Walgreens now, because that's our next stock.
We're talking about drugs.
Drugstores.
Drugstores. Well, I'm not going to go there.
I think you're going to get in trouble.
I'm already in trouble. I'm already in trouble.
Can I just move back to business for a second?
Yes.
Get us all
Please.
out of trouble. IAC, which is the parent of Match. What an amazing story that company is. I don't think they get enough credit. I mean, think of all the businesses that have spun out of there, how well they've done. And Barry Diller, Joey Levin, great CEO, they just keep doing it over and over again. I think their stock's up 5 times in the last 3 years. Match stock is up 5 times since it IPO'd right here 4 years ago. It's a good business.
I don't disagree. I think they've done, but I will agree. Not only will I not disagree, I will agree that they have always been sort of underappreciated.
They have a low profile. I mean, Barry Diller doesn't have a low profile, but the way Joey carries himself, there's not a lot of self-promotion. And look, they do something that other executives don't like to do. They take crown jewel assets that make sense not under their umbrella, and they spin them out on their own. And so many executives don't like to do that because they like to go to the country club and say, hey, I run a $50 billion business, and they don't want to chop it down to 25 if that's what's best.
It's a very interesting model. No, it's an interesting model because what they're effectively doing is taking stuff in, fixing it, getting it out.
Right, and they're very good at the marketing side of it. They're great. They're the best.
All right, let's move on to Walgreens, Dow component, of course. The drugstore chain plans to close about 200 U.S. stores in a move expected to generate yearly cost savings of more than $1.5 billion by 2022. That is about 3% of its U.S. footprint. That stock down 0.5% pre-market.